What is financial independence? What is passive income? And how to invest like a pro? Hello, everyone, and welcome to the Assets of Value podcast. Today, on 29th December, we connect to give an industry insider's perspective on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. First thing first, what is financial independence? It can be defined as the ability to sustain oneself indefinitely without having to work for somebody else. So, are businessmen who owns a business financially independent? That's where you need to realize that financial independence does not mean filthy richness. Because richness not only creates the need for more rich to be rich. A millionaire who has $1 million on a fine day will not be a millionaire if he or she decides to spend $1 from their holdings. So, is becoming rich the road to financial freedom? Probably it can help you to get there, but it cannot help you to stay on the course. So, in this episode, we are going to discuss everything you need to know about financial independence and how to invest using your brains. Of course, I am not here to talk about DYOR, that is, do your own research. I think that is an extremely overcomplicated and overused word which doesn't have any meaning. How can people do their own research if they don't have the time to do that? And the people like me who do research on financial markets, quality of assets, and investment opportunities, when people like me decides to say others to do their own research, it means that people like me are not doing the job correctly. Giving investment advice is different, but asking everyone and literally everyone to do their own research is an overkill. First things first, let's understand what is passive income. Passive income is something that you earn regardless whether you are working or you are not working. It's an income that you get when you're on vacation on Hawaii, when you're sleeping, and more. So you don't need any active work to generate that asset, generate that additional cash flow, which is passive income. So if you are really looking to generate a dependable, stable passive income source, you should understand what is an asset and what's a liability. People, like ordinary people, consider what they own as their assets. But what they own, if those things or assets or so called assets do not make them income, do not bring money, they are not assets anymore. Is your house an asset? Of course, it becomes an asset when you rent it out and you generate cash flow. It's an asset when you have the ability to sell it at any given time. But if you are having a house just for your purposes, your living and everything, then you're confining yourself to a place and you're restricting yourself from other opportunities, maybe bigger opportunities. I'm not suggesting that having a home is a liability. Of course, home is an asset, but it's not a financial asset, but a psychological asset. And home is where you and your loved one live. On the other hand, true assets are something that generate money, that continue to generate money even when you sleep. And I'm not talking about just Web3 investments, I'm talking about anything, including Web2, including physical assets, including digital assets that you can generate income from. How to build these passive income sources is a big question, and we have the solution in crypto, but I'm not talking about crypto today. I'm talking about financial independence. To have financial independence, to escape from the rat race, you need to have financial literacy. What I did when I entered crypto was I listed down my assets and my liabilities, and truth be told, I didn't have any assets, nor did I have much liabilities. But what happened was I realized the procedure of identifying an asset and identifying a liability. Now, are there enough passive income sources available, especially in the times of crypto winter? Is a big question. Earlier, I used to suggest to go for Binance staking that gave 10% or 8% APY for USDT or BUSD staking for initial investors. I mean, investors with a small sum of money, they are trying to time the market and buying the bottom. Later, when each centralized exchanges started collapsing, people moved their money en masse to their own wallets, which is essential to do. And then when they did it, it came to mind that crypto doesn't have any good passive income sources with stablecoins. First of all, why would you even hold a stablecoin when you have access to dollar? When you don't have access to dollar, holding stablecoins is a logical move because your native currency might be depreciating against dollar, and you can realize more purchasing power when you hold dollar rather than your native currency. In search of that passive income with stable coins, all I could find was extremely minimal earnings, 1% to 2% earnings, maybe on DAI, frags, and even USDC. And of course, there are high risk, high gain yield farming protocols that gave 50% to 200% APY. And the Kava.io, that gave almost 22% APY for stablecoin holdings, that too in a safe manner. But with what was going around the market, especially with DeFi protocols and all the smart contract hacking situations, I couldn't recommend to hold any stable coins or farm any stable coins in any DeFi platforms. The second option was to hold coins, for example, DOT, Atom, and all these proof of stake coins and stake them to earn a reward. For example, Cosmos Atom token gives you around 20% APY, while Polkadot gives you around 11% APY. And we know that Cardano and all those POS chains gives you 3% to 4%. But the problem was with the bearish sentiment, you could be buying a lot of Atom at $10 per Atom, and Atom could fall to $9, which it already did. It could fall to $5, which it already did back in June. And this could happen over and over again. Although, over a long period of time, it doesn't make a difference if you believe in the ecosystem. But you are potentially missing out on biggest ROI opportunities if you simply hold dollar and invest in the right time. That begs the question, when is the right time? First, you can invest at the perfect market bottom, but nobody can do that because nobody has a crystal ball. Second is that you have to outsmart market. You have to look for certain indications from the market and from the investors that the bottom is in. That include analyzing the market, constantly interacting with the market, and studying about it, which itself is a full-time job. So the logical option becomes DCA, which is dollar cost averaging. DCA is an excellent strategy when you consider holding an asset or investing in an asset for the long term. Let's take the example of Bitcoin. And what is the fair value of Bitcoin in the cycle? You can always say the previous high, for example, the 2017 high of Bitcoin, is a fair value when you want to invest in Bitcoin in 2022 or 2023. But we are even sitting below that figure at 16K, which makes Bitcoin rightly valued. But the problem here is that Bitcoin is correlated with traditional market. Bitcoin is correlated with DXY, that's dollar currency index. Bitcoin is somewhat correlated with inflation because inflation data fuels investor behavior, which in turn impacts Bitcoin. In my case, I DCA when I believe that most of the holders of Bitcoin, that's long term holders, miners, and short term holders, are in massive losses. That's the best time to invest in Bitcoin. Not financial advice, but probably DCAing from 15K to 16K, that tight range is a good bet going forward. I know crypto influencers are predicting and rooting for Bitcoin back to $3,000 levels. I do not see it happening because influencers believe that it's happening. I also do not see Bitcoin at 200K in the next bull run because influencers are believing it. They are telling their followers that Bitcoin is going to reach 200K next bull run. So it might not happen. We know the famous Plan B who predicted for 100K BTC, and everyone who followed Plan B believed in 100K BTC. But Bitcoin peaked, made its all time high at 69,000, and returned to a bear market. This is gonna happen again soon before you can even realize. People will continue waiting for $3,000 BTC and they'll be left behind. And then when Bitcoin pumps back a little by little, maybe 10% at a time, 15% at a time, they will become perma bears, suggesting this is just a relief rally. Bitcoin should go down any moment. But the market is bigger than influencers. The market is bigger than researchers. The market is bigger than investors. The fundamental market forces will always outsmart investors. That's how investing works. Back to the topic, to build a passive income source, you need to find assets that could perform or outperform the market, the generic stock market that gives an average of 20% or to 25% return on a good year, and invest in those assets. And you need to DCA in, DCA out from the market. And an investor looking to build his or her passive income source or assets should consider DCAing in when the market is undervalued in times like this, and DCA out when market is overvalued, maybe 6 months or 3 months or 4 months from the halving event that might happen in 2024. Fingers crossed, I believe the next bull cycle will be a lot different. Maybe if some more deadly events happen in crypto. Also, you have to keep in mind that the window could extend further than 2024 because of macro market situations. Basically, an intelligent investor should be ready to react rather than predict. Those who predict the market conditions are outsmarted by those who react to the market on right conditions. So simply watch what the market is doing and react to it. When the market goes down, when the people panic and sell their holdings, buy it. When the people are overjoyed, when the common investor is overjoyed and is buying crazily, sell your assets to them. To beat the market, be flexible and be decisive is the only way you can achieve your financial independence. And with that, winding up today's episode, this is the last episode of 2022. Wishing you a happy new year. This has been super fun. I'm glad that you could jam with us today. And that's it for the day. See you next year in 2023.